In this video, we're going to cover the basics of credit score. So this is really everything that you would need to know about a credit score. Of course, you could always dive deeper into any subject, but this is really everything that you should at least know. This video is also going to be a little bit differently because I created a PowerPoint for this video just because I feel like there's a lot of information, and so I wanted to have text available for anybody who is watching this to either take notes or just to have a better visual of what I am saying. So this is a little bit different. I do have my laptop in front of me with this PowerPoint, so I'm going to go to the corner of the screen now and I will begin presenting my little PowerPoint. So first of all, the first question is, why is your credit score important? Now, if you are a follower of Dave Ramsey, or you may have heard other people say that your credit score is not important, I highly disagree with this. The reason your credit score is important is because it helps you to, one, qualify for a loan, and two, to have a lower interest rate on those loans. So unless you're Dave Ramsey, or unless you're somebody who has hundreds of thousands or millions of dollars saved up in cash to pay for things like a car or pay for things like a house or anything that may require a loan, then you probably want to have a credit score. Your credit score can help determine how large of a loan you qualify for. Of course, your income plays a role in that too, but it also helps determine your interest rate. So the higher credit score you have, typically you will have a lower interest rate, which of course is going to save you more money on the life of the loan. And then if you have a lower credit score, you will have a higher interest rate, and obviously that will cost you more money. Now let's talk about how to build your credit. The first thing, and the most common thing, is a credit card. Now, depending on your age, depending on your circumstance, it's probably pretty easy to get qualified for your first credit card, especially if you have no credit at all. But a credit card is one of the main ways for you to build up your credit. Of course, you want to be responsible with this decision. You want to be responsible with, the limit and making sure not to overspend on this credit card. But that is one of the best ways to increase your credit and actually even have a credit. If you're younger, or if you are struggling to build up your credit, you could possibly be a co-signer with, maybe with your parents or something like that, or your spouse, or you could be an authorized user. So it's kind of a similar idea. And basically, if they put your name onto something, but they are making the payments and they're making those payments on time, that can help build your credit. So this is more for somebody who is still living with their parents and probably pretty young, or just getting a start now. Student loans typically will help to build your credit, however, not until you really start paying for them. So when you're in school, your loans, you don't have to pay. They're in forbearance. You don't have to pay for your loans while you are in school. However, if you did want to build your credit, you could pay some of your loans while in school. I don't know if that would even help to build your credit, but once you are out of school and you have to start paying back your student loans, then it will help to build your credit. You can apply for an auto loan. Now, if you don't have a credit, or if you have a really low credit score, then this may not be a good idea because you'll probably have to pay more or have a higher interest rate on that auto loan. But this is another way that, of course, you would be building credit because you would have payments to make each month. And then rent or bills. So a lot of people don't know this actually. You can go to different websites or different services to have your rent or utility bills help to increase your credit score. So there may be a fee for some of these, especially with the rent. There are some services out there that you can have them pull your rent records and all future payments toward your rent, and that will go toward your credit score. So this is good to do if you are looking to really increase your score, or if you're really desperate to increase your score, and also if you are willing to pay a fee for that. However, there are things like Experian Boost, I believe it's called, and they will look into your bank account and see if there are any utility bills that they can use to boost your credit. So it is a free tool that you can use. There's also other services that you can use, I think, with a fee to show that you've been paying your bills on time, and that can go toward your credit from the past and going into the future. Now, there are different types of credit scores. So the most common ones, there's PHI-co, Vantage Score, and then there's credit bureau scores. Now, Honestly, I don't even know which one is the most legit. I think typically if you're going to apply for a mortgage or something like that, they're going to be looking at one of your, either your FICO score or your credit bureau scores. Personally, I don't stress about which one I am looking at. The most common one that you'll see is the FICO score. So for example, if you have a credit card, you can go onto the app or onto the website and you'll typically be offered a FICO score for free, and they update it every month or two and you could see your FICO score. And then there's other apps which we'll talk about in a bit, but those typically have your Vantage score, which is a very similar score. And then there are 3 different credit bureaus: TransUnion, Experian, and I always forget the third one, Equifax. So you could go onto those websites and find your scores for each of those there. Now, between these scores, they're going to have different values, but this is kind of a basic scale here. So below 629 is a bad or a poor score. 630 to 689 is fair. 690 to 719 is good. And 720 to 850 is excellent. There are other charts that are similar to this that, you know, break it down even further from like excellent is a lot higher than that, or there's, you know, great, excellent, good, things like that. So personally, I don't stress about which score I am looking at. They're all kind of about the same, and so you can just kind of go based off of that number, that whichever one that you would be tracking. There are multiple credit score factors, and these are really important because some of them have a really high impact on your score and some of them not so much. So the first one is your payment history, your credit card utilization, any derogatory marks, age of your credit history, total accounts, and hard inquiries. So the first 3 I have bolded because those have a high impact on your credit score. And so we're going to get into all 6 of these right now. So your payment history, like I said, has a high impact on your credit score, and this is probably one of the most important. So if you make a payment past 30 days, then that will hit your credit score. And if you make a payment past 60 days, past 90 days, it's basically in 30-day increments, then it will be worse and worse, eventually leading to either collections or like repossession of your vehicle. And this typically will stay on your report up to 7 years, which is a really long time. And if you don't make a late payment past 30 days, you would probably just get a late fee and it wouldn't be reported to your credit, but you still want to be mindful of that. So you really want to avoid making any late payments on any of your bills, on any of your cards, on any of your auto loans, anything like that. Avoid that completely because this will dramatically lower your score. So I do have a couple of tips. If you notice yourself making any late payments, even if it's a day or 2, you need to start taking action. Figure out what's happening there. You either need to figure out a better system for paying your bills, or if you don't have enough money to pay those bills, you've got to figure that out. So start taking action and prevent that from happening ever again. Keep track of all your bills, and you can do that by creating a budget. I do have a video on creating a budget, and I will link that down below. As you guys know, I record my budget every single month in my planner, on my computer, in multiple areas. I am constantly keeping track of my spending, and I'm very aware of where all of my money goes. So keep up with all of your bills, the due dates, exactly the minimum payment, exactly what's due, whatever. And make sure you have the login to everything that you need to pay your bills. If you're doing everything electronically, or if you're paying through the mail or anything like that, make sure you're aware of all the companies that you owe money to. And this is a great way to prevent any late payments. Also, having an emergency savings is really important. So that way, if you're short 1 month, then you can dip into that if absolutely necessary. Obviously, don't spend more than you can afford. So if you have a credit card and you are using up the whole amount on the credit card, that can be really problematic, and you may struggle to make payments on time in the future, even though you may not think that right now. Set up auto payments. So again, another great way to never miss a payment. I have all of my bills on auto payment. So they take out on the same month every single day, and that is all that I have to worry about. Never co-sign on anything. If it's your family, if it's your friend, if it's your significant other, potentially even your husband or wife, do not co-sign unless you are willing to accept the risk that comes along with that. I highly suggest you watch my video titled "The Worst Financial Mistake I Have Made." I share my story on this, and because of co-signing on a car, my credit score took a huge hit, like really dramatic. So I highly encourage you to go watch that and never co-sign on a car. Okay, so the next factor was the utilization rate. Again, this one has a really high impact. Now, this is basically how much of your credit, available credit, you are using. So basically your credit cards. So if you have a $5,000 credit limit and you have $2,500 charged on there right now, your utilization rate would be 50%. And typically you want your utilization rate to be under 30% and you'll be like in the green, or basically that is considered a healthier number to be at for a credit score. Personally, I prefer to be at 0% of credit utilization, just because any credit card debt is going to lower your score. Now, they do say to keep it under 30%, but if you have it at any percent, then that means you have revolving debt and you're probably paying interest. Now, I still do use my credit cards, and as you guys know, I had a balance transfer on there, but I was still using my credit cards, and now I'm completely credit card debt free. However, I still use my credit cards and then pay them off immediately. So I literally will go to the grocery store, buy groceries, and either that day or the next day, I pay that off. Always prioritize paying down your credit card debt first, or basically this is one of the most important debts to prioritize, because it typically has a higher interest rate and it's going to cost you more in the long run if you keep it around. You can call your lenders and ask for a credit limit increase, but do not use that credit limit. You actually don't even have to call. You can typically do this on the app or on the website and just request a credit limit increase, and you can put an amount, and sometimes they'll give you that amount, sometimes it'll be less or potentially even more. And so you can literally go and do that right now while you're watching this video, or like pause this video. You don't have to make any calls, and go look at your apps that you have for any of your credit cards and see if you can request a credit limit increase. It's usually immediate. And so with that, you can easily raise your credit score because it's going to lower your utilization rate, if that makes sense. But do not use the difference, okay? You can also call your lender and ask for a lower interest rate, and this will allow you to, each time you make a payment, you'll be paying more toward the principal and paying more down and get rid of that debt quickly. The next factor of a credit score is derogatory marks. Like I said, this also has a high impact. So this is typically things like going into collections, your car being repossessed or anything being repossessed, and or filing for bankruptcy. And this will stay on your report for 7 to 10 years. Again, a very long time. So you can kind of go back to the tips that I offered before on never missing a payment, things like that. So stay on top of your payments, keep track of everything, track your spending, write down when things are due. Be financially responsible. Obviously, you don't want to go and get a car that you should not be getting. You know, if your income is $50,000 and you're going to buy a car for $40,000 or $30,000 or even $20,000, honestly, is not always the responsible thing to do, and it's going to cost you a lot of money every single month. And if you can't pay that and then you start making late payments, those are going to hit your credit, and then eventually you could get your car repossessed, which is going to really destroy your credit. So be really financially responsible with the decisions that you're making, how much you're charging to your credit cards when you're opening credit cards. Just a general rule of thumb with finances. Weigh your options. So if you are thinking about bankruptcy, remember that this is a really big deal. You know, obviously a lot of people file for bankruptcy, but if you can prevent it, and if you can get yourself disciplined and motivated and inspired and put in the effort to get out of debt or to fix your situation, then consider that first. You know, talk to other people, watch YouTube videos, see if there's a different option for you rather than just immediately filing for bankruptcy, because you could potentially fix this. There's probably somebody in the same exact situation as you, or who was in the same exact situation as you and was able to get out of this. So do some research before just straight away going to file for bankruptcy. It feels a lot better to get through something like this than to just give up and file for bankruptcy. Check your score regularly. Sometimes there could be mistakes, you know, if there's something that pops up on your account, then you can report that and then get it removed. So if you are responsible with your finances, you probably won't get a derogatory mark. That's pretty rare. So, frequently check your credit score because that will, tell you if anything is suspicious. Again, set up auto payments because that will prevent the late payments and collections. The next factor, which has a medium impact, is the age of your credit, the history of your credit basically. And lenders want to see that you have experience using credit responsibly. Typically, for things to be in the green or for you to have a higher score, your average credit history would be greater than 7 years. So depending on your age, this is completely impossible. And so I know for me, I'm in like the orange, or I don't know, it's like in the middle because my credit history is less than 6 years. I think it's like 5.5 or something. So I'm not quite there yet with being in the green, but this doesn't really impact your credit score too much. The first thing is, of course, open an account. If you don't have any credit right now, you can start building that credit and start creating that history right now. Of course, be responsible with it. I am, reiterating that a lot, but open a credit card or whatever, some sort of small account that you could start your history now. If you pay off a credit card, do not close the account unless you absolutely are scared of spending any money. If you have a problem with spending money, then do not close that account. The other thing that you could do is just cut up that card and completely remove it from your computer system rather than completely closing it. But if you close that account, it's going to shorten your, credit history, and then that's going to lower your score. So also, if you have paid off a card and you are keeping it at a $0 balance, they could close that account on you. They may warn you, they may not. And so you want to, every couple of months or so, you just want to charge a small amount to that card. $5 works, $3 works, and then just pay it off immediately. Just don't forget about it. Limit how often you open new accounts. So each time you open a new account, it's going to decrease your average history, of course, again, resulting in a lower credit score. Next are your total accounts, and this one has a low impact. So lenders want to see that you can use a variety of accounts responsibly, and this also includes closed accounts. So this is opened and closed accounts from ever. And typically, to be in the green, you would have more than 11 accounts. And so for me, the bulk of my accounts comes from student loans because I started with 11. With this one, there's not too many tips. Just basically keep an eye on your credit score and keep an eye on your credit health and make sure your accounts are accurate. Make sure they're open. The ones that are listed as open are actually open, and the ones that are listed as closed are actually yours and that they're actually closed. And don't open unnecessary accounts just to increase that number because it really won't affect it too much. And with time, you could potentially get there. Maybe if you're into credit hacking, like travel hacking or anything like that, you would have more cards, and over time you could learn how to properly do that and have, multiple credit cards and be using it properly. But don't rush to open multiple accounts just to make this a satisfactory number. The final one was the hard inquiries, and this is a low impact. So this is basically applying for a credit card or applying for any sort of loan. And each time that you do that, it could hit your credit score. It would be a hard inquiry, and it could be a couple of them. So I know if you go to the car dealership, sometimes they'll hit your credit multiple times because they're looking through multiple lenders. So just be careful of how many times you are actually trying to apply for something. These can stay on your report for up to 2 years, but typically over those 2 years, the effects will lessen on your credit score. And less than 2 inquiries is typically how you will stay in the green or have a higher credit score. To keep this at a healthy number, determine your approval odds before applying for loans. So you can do this typically by looking at, common requirements of a credit card or of an auto loan. You can kind of look at things with common sense. If you have a low income or a really bad credit score and you're trying to apply for a card that requires a really high credit score or a higher income or something like that, then you probably shouldn't apply for it. Just do your research before applying for something because that will obviously hit your credit. So how can you track your score? There's a couple of things. You can use multiple apps, your credit card apps. If you have Bank of America or Capital One or Chase or anything like that, your PHI-co score will typically be presented on any one of those. And they update it every month or two, like I was saying, so you could check on there. I personally use Credit Karma. I love Credit Karma. They use the Vantage score, and that's what they show you on there. I really like how Credit Score has everything organized, and I can see literally everything in one place. And so I just love their simple format. And then you could also go to the credit bureau websites. So like I said, TransUnion, Experian, and Equifax. And you could, I think some of these require you to pay, but I think you can get like a free score check every year or so. So those are the main ways for you to track your score. Now, those are really just the basics of a credit score. I am going to make a video on how you can increase your credit score within 30 days or, a lot faster. And that will offer some more tips for you to increase your score. I think a lot of people don't understand their score, or they don't even know what their scores are. They don't keep track of it. They don't pay attention. But I think it is important. It's something that I like to watch. It's something that I like to look at every week or so. And it's just interesting. It's part of your financial journey, so it is something that you do want to keep track of. And so hopefully this helps if you didn't know anything about credit scores. Hopefully I didn't leave anything out. If I did, please comment that down below so I could pin your comment. Or if you have any questions, of course, ask that down below. But thank you so much for watching. I will see you in my next video, and stay tuned for how to increase your credit score. But other than that, please give this video a thumbs up, subscribe if you haven't already, and I'll see you next time.